Know your numbers better than your accountant. Key performance indicators and the real value of metrics. If you're like most business owners, your days are filled by efforts to make your company successful. Those tasks might be focused on making a great product, generating sales, or building customer relationships. But how good are you at making money? And how well are you at managing your resources? Many entrepreneurs, however, misunderstand the process of growth. They don't know how to take their business to the next level. They assume that all they have to do is create a profitable company and growth will take care of itself. The part that is missing is the level of discipline and skill necessary to collect and analyze your relevant business data, known as metrics, that are key performance indicators to make effective, timely business decisions. KPIs, or key performance indicators, are performance metrics explicitly linked to one of your strategic objectives that helps your company translate strategy execution into quantifiable terms. This allows you to see where you're going, how well you're doing, and where you require improvements or course adjustments. KPIs are vital management tools. If you can't measure it, you can't manage it. And metrics are critical to ensuring that your marketing is aligned to your business results. An interesting report by the Aberdeen Group says tracking your metrics will dramatically improve your business results. Companies that tracked metrics versus companies that didn't had 2 times the net income growth year over year and had 3 times higher sales growth year over year. Now imagine what you could do with the extra money. Isn't the effort worth it to do a good job at key performance indicators? Establishing the right KPIs is just as essential a component of successful strategic execution as defining the right strategy for your company. I mean, trying to execute without KPIs, or even worse, the wrong ones, is like taking a road trip to a destination you've never been to without using a map. If you're lucky enough to ultimately make it to your intended destination, the odds are it will have cost you excessive time, wrong turns, and detours, not to mention frustration to get there. Key performance indicators are an important part of the roadmap on your journey to better business performance. The simple exercise of focusing attention on a smaller number of key performance indicators and tying them to your business outcomes will help better align your company with its users and its customers. I help entrepreneurs create a single-page dashboard of key performance indicators and how they support each other to deliver the ultimate goal, which is value to the shareholders. So let's go through a small case study, a small example. Cinnamom's Bakery. Cash in the bank, about $12,000, and they're targeting business to business, so we can see who their customers are. In the first month, they have sales of $25,000, cost of goods sold $15,000, gross profit of $10,000, net profit of $2,500, and this is not uncommon with a lot of new businesses. The thing that's noteworthy here is to take a look at their sales growth. In the first 3 months, we'll see a rapid growth from $25,000 to $40,000 and another 50% increase in growth in month 3 to $60,000. Now let's fast forward a couple of months and we'll see that Cinnamom's Bakery is out of business. If you're a business owner and you don't know why they're out of business, then you need to talk to your accountant, talk to a business coach, talk to me, because this is a common problem with rapid growth businesses, and you got to make sure that this isn't happening with your business. Key performance metrics will help you get on the right path. So I'll help you create a KPI metrics dashboard to group the KPIs together into displays so that we can have a report that's at a glance view of how your business is performing. Now, some of the groups we're going to use are, I guess the first group would be financial perspective. Some of the KPIs The metrics we're going to be watching are revenue growth. I mean, how well is your business growing? And if you're looking for outside investment, that's going to be a key indicator that outside investors will look at. Gross profit. The gross profit margin basically shows us how much money is left of each dollar of the company's revenue after taking away the cost of goods sold to pay some of the bills like overhead and expenses. When we take a look at gross profit, I've talked to business owners who didn't get off the starting blocks high enough. So looking at the gross profit says, there's no way at this level you're going to make it. Gross profit really tells us whether we got a chance of making a profit at the end. Net operating profit, it provides insight into our operating efficiency and our pricing strategy. The operating profit margin can help us understand whether the costs of operating our business are too high for the production or sales volume. Then the cash conversion cycle we talk about a bit talks about the days outstanding or the time it takes to sell our inventory, the amount of time needed to collect receivables. And when I coach business owners, this is a constant, common sticking point. The receivables are just too far out. So we need to develop strategies to bring them in to a closer number. And then the length of time the company is afforded to pay its own bills without incurring penalties. That's not such a critical one as the first two. And then finally, in the financial metrics are the debt-to-equity ratio, understanding the proportion of our debt that's financed versus shareholder equity. Now, as in most parts of our businesses, there are a number of other metrics, but we'll just start off with a handful. And obviously, when we sit back and we talk about finance, we can't talk about finance of your business without talking about cash flow. The second part is the customer perspective. Talk about the lifetime value of a customer. Sometimes when we're doing promotions, we look at the single purchase event. But looking at the lifetime value helps us to have a better understanding of the relationship we have with the customer. What is the customer satisfaction index, the customer retention rate? And there's a few more we'll add in that area. From the marketing and sales perspective, we have a couple of metrics. We could talk about cost of acquisition, market share, and a number of other ones. And then we'll talk about operational processes, the supply chain, move on to employee satisfaction, and we need to calculate revenue per employee. And also, we need to rate the employee satisfaction index and take a look at our employee churn rate to see if everything fits. If it doesn't, we need to make some changes. And then finally, corporate social responsibility. But I don't want to overwhelm you. I just wanted to give you a brief outline of some of the real valuable performance metrics we could use for your business. And in future videos, we'll start off slow. We'll start off, first of all, with the financial metrics and make sure that there's a great understanding of how they'll apply to your business. For the KPIs to be a vital instrument, they'll help you understand whether your business is on the right track or not. Why do some entrepreneurs not want to delve deeply into their financials or develop a series of metrics or key performance indicators? And I think there's 4 reasons. Quickly, I think, first of all, there's some people that don't like math and fear math. I'm here to say you shouldn't fear it. I'll show you an easy way to do math, as easy as 1, 2, 3. I know I was in high school decades back, and I could see students in the class taking algebra who just couldn't get it. Not because they weren't smart, because they maybe missed step 3 out of a 7-step process. And if you miss part of it, the rest is difficult. In my process of 1, 2, 3, I'll make sure you're with me every step of the way. Number 2, the second reason is people don't see a real need to make profit. Now, profit gives us the resources to help keep our business going, to help fund our livelihood. So sometimes we need to refocus on the importance of profit in a business. Third possibility is that some business owners might feel ignorant, not fully understanding the process, but I'll help clarify that very quickly. And fourth possibility is they don't have time. But when you see the real value in what these numbers mean and how quickly you can change the path of your company, they right away overcome this concept of time and see it as a high value investment in their business. So I'll help you create the metrics to start sharing these numbers with your employees in weekly meetings. Explain to them where the numbers come from, why they're important, and how everybody is affected by them. And pretty soon people will begin talking about the numbers themselves. They'll start figuring out ways to move the needle in the right direction. And once that begins to occur, try taking it to the next level. Forecast where the numbers will be in the coming months or quarter. So stay tuned for future videos. I'll be focusing on key metrics you should use to make your company profoundly profitable. Thank you for your time. I'm Coach Gusti. Call me when second place is not an option. Bye for now.